Nifty gives up all the gains since the Lok Sabha elections, drops to the lowest level in 7 months as 15 lakh crore rupees of investor wealth is wiped out in a single day. The rupee's free fall continues, marking the biggest single day decline in 2 years as dollar index continues to strengthen. Wall Street closed mixed. The Nasdaq corrects for the fourth straight day ahead of the release of the key inflation data later tonight. Asian markets open mixed while the GIFT Nifty is suggesting a higher start for the Indian market. Crude prices gain for the third straight session as Brent climbs above $80 a barrel. Gold dips on strong dollar. Inflation in India drops to a 4-month low. Consumer price index slows to 5.2% in December, which is better than CNBC TV 18's estimate. Now, food inflation eases but remains stubborn at 8%. HCL Tech reports third quarter earnings largely in line with estimates. Revenue growth is just below 4%. Margin is above estimates. The company also raises the lower end of its revenue growth guidance for the full year by 100 basis points to 4.5%. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. A quick look at what the Asian markets are doing this morning. A mixed opening is what we could say that's coming for the Asian markets. While we're seeing Hang Seng that is holding on to good gains right now, 0.6%. Taiwan index holding on to gains of 0.9%. So yes, much better than yesterday's trading session. A bit of a subduedness that's coming for the Japanese market. That's Nikkei, that's down 1.5%. Other than that, ASX 200 managing to hold on to mild gains. Shanghai is also managing to hold on to mild gains. So very mixed to slightly positive opening is what we've seen for the Asian markets. Indian markets, Nifty implied open, that's indicating a positive start. Right now, 114 points uptake. Yesterday we'd seen a sharp fall. So as of now, 114 points up for the Indian markets is what we are watching out for, is what the indication is coming in. So let's see how the Indian markets actually open up and trade. But Asian markets indicating mix, Indian markets a good green opening is what we're expecting. A quick look at what the US market did last night, right? Wall Street, that closed a mixed. Dow Jones, when you look at it, that is gaining about 1%. The S&P 500 was also marginally higher, while the tech-heavy Nasdaq, that slipped almost 1/3%. This is correcting for the fourth straight session that we saw that Nasdaq actually saw a slip coming in. Now, among the mega tech stocks also, they were under pressure. Whether you look at Apple, which saw some pressure after reports showed that the company sold lesser iPhones worldwide and lost ground to the Chinese rival in the fourth quarter. The earnings season is also set to kick off on the Wall Street with banking names like Citigroup, Goldman Sachs, JP Morgan Chase set to report their results on Wednesday. So we'll be keeping an eye out on what happens on the earnings front. Now, keeping up with the US side as well. Now, we had Jefferies market strategist David Zavos, who actually comments on that while the economy is actually quite strong, he hopes that the Fed is making the right call in the next Fed meeting. Meanwhile, we had Gabriela Santos, who's the chief market strategist for America at JP Morgan Asset Management, remains quite cautiously pessimistic on certain pockets of the economy. That'll be important to watch out for. So let's listen in to what they had to say.
We've seen a significant 10 to 15 basis point move in front end yields. People are getting nervous that the Fed is going to have to stay much higher for much longer, and that's actually not going to be the right signal for the Fed. So the interesting thing about what the price action said to me on Friday and is continuing today into Monday is, even though we saw this unbelievable strength in the U.S. economy and people are quite optimistic about that strength going forward, they're getting increasingly worried that the Fed's going to have to make a bit of a mistake keeping rates too high for too long, and they're getting very nervous about what that might do to long-term prospects for growth.
I think cyclically, really last year was a story of coming out of the cyclical storm, realizing corporate household balance sheets are doing fine. We're normalizing across a variety of indicators, the labor market, inflation. We're also cautiously optimistic about the long run outlook. Also, a big story last year was the improvement on the supply side and productivity reaching 2%. Where we're more cautiously, I wouldn't say pessimistic, but the reason for caution, we think, is much more in portfolios. there is a cost to pay of very strong but very concentrated returns, which is when we speak to investors, what was a 60-40 allocation is now a 75-25 allocation. What was 50-50 growth value is now 60-40. So there's a lot of a focus on previous winners, big recency bias, and that doesn't set you up for strong returns going forward.
That was all the global market action that we had for you all this morning. But how is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, tell you how the stocks and which important stocks are going to be in focus today, as well as the FNO action. So firstly, let me go across to Hormaz, who's here to tell you how the market setup is looking like. What are the important cues that we are watching out for this morning? Good morning, Hormaz.
Good morning, Vinny. And there is some relief that can be seen on the screen because the GIFT Nifty as of now is indicating a gap up for our own markets. And we may want that kind of relief considering everything that could have possibly gone wrong, went wrong in yesterday's trading session with global headwinds, a stronger dollar, crude prices, yields, everything acting as a headwind for our own markets. We gave up the lows of November on the Nifty, around almost 900 points since the 3rd of January. The bigger pain, though, was felt in the broader markets because over the last 6 sessions, the mid-cap index is down almost 9.5%. The small-cap index is down 11% in these last 6 trading sessions. And even the sectoral indices are bearing the brunt, right? Because from their respective highs, the real estate index, the PSU banks, the PSE index is all down between 20 to 25% from their respective peaks, which they had hit somewhere in June or in July of last year. Then in all of this broader market mayhem, we have completely forgot about the Nifty bank because that too has broken key technical supports, then almost broke the 48,000 mark as well in yesterday's session, and that too is down almost 6,000 points from its record high, or 12% in percentage terms. Now the key questions for the day though is that if there is a bounce, can that be sustained? More importantly, the comfort though comes from the fact that the December CPI was better than expectations. The dollar has cooled off, although the crude prices remain elevated. And how long can this bounce be sustained? The GIFT Nifty for now is indicating a relief. There was relief last Tuesday as well, but we know what happened after that. The bulls would hope that this would sustain.
Okay, Hormaz, thank you so much for that. That's how the market setup is looking like. But which are the important stocks that you should be keeping on your radar this morning? We have Vamakshi here to tell us about that. Good morning, Vamakshi.
Well, good morning, Vinny. Let me first start off with HCL Tech. The company reported numbers largely in line with estimates. CC revenue growth came in at 3.8%, slightly lower than expectations of 4.1%. The CC revenue guidance for FY25, the lower band of it has been revised from 3.5% to 4.5%. Margins came in line with estimates at 19.5%. Angel One reported net broking revenue downtick of nearly 10% sequentially, mainly on account of impact from F&O norms and weak sentiment in the cash segment. EBITDA margin declined to 39.3% due to higher OPEX. In addition to that, the board has approved an interim dividend of 11 per share and has appointed Ambarish Kenge as the group CEO with effect from March 6, 2025. Delta Corp, in an otherwise strong quarter, reported a weak set of numbers with revenue seeing a downtick of 7.5%, margins contracting from 26.6% to 16.6%. Anand Rathi has raised its revenue guidance to 980 crores and its net profit guidance to 295 crores. The PPT margin has improved sequentially to 43.9% due to lower operating expenses, and in addition to that, the board has gone ahead and approved a bonus issue in the ratio 1:1. Apart from that, United Spirits on our radar. Hina Nagarajan has resigned as the MD and CEO of the company. She will be replaced by Praveen Someshwar, who will be taking charge from 1st of April. JSW Energy has received an LOI for 3.6 gigawatt KSK Mahanadi thermal power plant. The company's resolution plan for this power plant has been approved, and the bid amount was 15,985 crores. BL is also in focus because they've received orders worth 561 crores since December 23rd, 2024. And lastly, we'll be watching out for Z Media. They will be raising funds up to 400 crores via various routes. They also approved increase in shareholding limits of FPIs and FIIs from 24% to 49%.
Okay, Vamakshi, thank you so much for that. Keep an eye out on those stocks in trade. But on that note, we're going to step into a very short break. But up next, inflation in India drops to a 4-month low in December. We bring you the highlights after the short break, so stay tuned in. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV 18. And on to the big macro data of the day. India's retail inflation moderated in December, coming in at a 4-month low. Lata Venkatesh is here to give us the details and decode the CPI data for us.
It's the best news that we have got for the economy in quite some time that the December CPI has come in at 5.22% compared to our poll of 5.3, and there were quite a few people, respondents, who were expecting even 5.4. And now it's 3 months in a row that the inflation has fallen from 6.2 in October and 5.48 in November, now to 5.22. The average of October, November, December now is a little lower than the RBI forecast. So there will be a little bit of expectation that the Reserve Bank will look at the falling trade and show it as a reason why it can cut rates in February. The best part was the fall in vegetables, especially this tomato, onion, potato, top as it is called. That's fallen sharply, and economists tell us that if you looked at the January numbers, they are looking like falling very sharply in the first January as well. So that rekindles rate cut hopes. But overall, the worry is that food inflation is still at 8.39% compared to the 8.3% poll that CNBC TV 18 did. The only negative point was cereals inflation is not falling month on month, and even year on year is still at a high 6.5%. Likewise, edible oils, after the import tariffs were raised, that is still a 14% year on year inflation. Those are the two difficult points. But to counter it, core inflation, which is the non-food, non-fuel inflation, has fallen to 3.6 compared to the expectation of 3.7. So all told, a good inflation number rekindles hopes of a rate cut from the Reserve Bank in February.
Okay, Lata, thank you so much for that. But moving on to some earnings, tech giant HCL Tech posted a largely in-line set of numbers for the third quarter. This was post-market hours yesterday. Now let's go across to Rima, who's here to give us the highlights in terms of what this quarter was looking like.
Thanks so much for that. So HCL Tech's numbers were largely in line with street expectations. Revenues were slightly lower. Constant currency revenue growth came in at 3.8%, lower than consensus expectations of about 4.1%. But margin expansion is intact. The company's margins expanded to 19.5% versus 18.6%, and that drove an 8.5% increase in the company's profitability. So margin and profit performance was in line with street expectations. The company has also raised the lower end of its full-year revenue guidance. The earlier guidance was 3.5% to 5%. Now they're talking about 4.5% to 5%. And one of the reasons for the upgrade at the lower end is on account of the HPE asset acquisition that the company concluded in just December. Margin guidance remains unchanged at 18% to 19%. Deal wins are steady, a little over $2 billion. The management commentary is also fairly upbeat. They're talking about their deal pipeline being at an all-time high. Large deals were signed in AI and generative AI-led. The average tenure of the signed deals is getting shorter. So overall, the commentary is fairly positive, and they also indicated the clients are looking to increase their IT investment in calendar year 2025.
Thanks so much for that, Rima. In fact, let's listen into what the CEO, C. Vijay Kumar, had to say on the deal win pipeline during the press conference.
Our pipeline continues to grow and remain strong. It's broad-based, and it is back on several deals led by our digital application business, engineering and R&D services, and digital process operations. Both Americas and Europe have seen a healthy growth in pipeline. We have a number of big deals across verticals and geographies and service lines, a really very robust and well-diversified pipeline.
And with less than 3 weeks to go for the union budget, we learned that from the government, considering that tweaking several custom duties is what is something that we could be expecting. Timsi is here to give us more details on this one.
Well, that's right. What we are given to understand from sources is that the government is considering a customs duty rejig on as many as 200 plus items to protect domestic companies. Sources say that currently the government is reviewing import duty exemptions that are given to these 200 plus items. The exercise is understood to be underway to assess to remove import duty exemptions that create an inverted duty structure scenario. Sources said that the customs duty rejig under this review exercise is likely to benefit sectors such as solar, EV, pharma, electronics and mobile phones, steel, etc. And yes, all of this is under active consideration. Sources added that the government is keen on having WTO-compliant support mechanism for domestic companies and is eyeing some measures to protect the domestic companies from the Trump administration's protectionist policies. As of now, no decision has been finalized as yet, but definitely a detailed review is on the cards, and now to be seen is what all does the upcoming budget unveil for the industry when it comes from the custom duties side. Back to you.
Thanks so much for that, Timsy. But on that note, we're going to slip into a short break. But countdown to the budget 2025, India is looking to seize the moment and establish itself as a global economic outlier. The upcoming budget, which will be NDA government's first full budget after election victory, will be key to unlocking the ambitions of millions of Indians. So tell us what you want from the budget 2025 by submitting your wish list to CNBC TV 18's Budget Box, and tune in to your budget headquarters, CNBC TV 18, for unparalleled insights and coverage on Budget Day this 1st of February. Welcome back, and you're watching Power Breakfast on CNBC TV 18. Now it's time to get you what's happening in the world of commodities. And Manisha is joining in with us to tell us just about that. Good morning, Manisha.
Morning, Vinny. Thank you for that. Well, I'll start with the crude oil prices because that was really buzzing yesterday. And while the prices are holding on the higher side of the range, we seem to have seen some profit taking from those kind of levels. So we are off those 4-month highs, but the concerns just about continue. The markets do believe that you could be looking at higher prices from here. The street will watch out for the U.S. inflation, weekly jobless claims, and retail sales. All of this data comes in for this week. And the point is that you have seen gains continue even as the dollar index is holding around those 2-year highs. So not just crude, but you have the metal prices which have seen some strength as well. So copper is now trading at around 2-month highs, and we also are looking at aluminum prices trading at a 4-week highs. Well, the Chinese numbers have come in on the stronger side. There is an expectation that you could be looking at stronger stimulus measures coming in from China as well. So those are a few factors which really seem to be supporting.
Okay, Manisha, thank you so much for that. So that's the update coming in the world of commodities. Now, bringing you some updates on the Los Angeles wildfires. Fire crews are making headway against the deadly fires that have scorched the Los Angeles area, which have crossed more than 60 square miles so far. Winds are expected to pick up through the next few days, and this will make the firefighting efforts more challenging again. More than 15,000 first responders are helping respond to the fires across Southern California. Investigation into how the fire started are underway. Reportedly, at least 24 people have died in the fire. And with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. But up next, Bazaar Morning Call will take the action forward.